If you've already heard Nilesh bhai, and if you believing being long-term investors, then I think there's a lot of good news. But if you're an index observer, if you're a trader, then maybe, like the person there said, the bad news first, that if you're somebody who looks at the stock market and defines a market being good or bad based on the Sensex value or the Nifty value that he sees on screen, then I don't think you're going to be blessed with a major rally anytime soon. Maybe at the end of this year, or even if we say look at March or April of 2016, I don't think there are substantial returns per se to be made if you just look at the index per se. So if you're going to be trading, there's going to be a lot of risk in the next few months, which will catch you unaware. There's going to be a lot of volatility, and there'll hardly be any good news around. Even now, I think barring maybe 10 or 12 trading sessions ago, when our governor surprised us with a 50 basis point repo cut, and the last, again, 5 or 10 trading sessions where the global markets have been supportive, except that, and therefore the Nifty, kind of rallied till yesterday. I think except that, largely, if you take, if you look at 10 sessions back, there was hardly any good news. And there are a lot of reasons for that, which I'll get into in detail, when we go slide by slide. But, so basically that's the bad news. The good news is that at this point there is no good news. In the stock market, when there is huge panic, when there is bad news everywhere, and there does not seem to be any good news at all, is actually the best time to buy stocks or accumulate stocks. Because there will come a time which will actually catch all of us unaware, and then we'll again come back, maybe invited for a camp here, and we'll say in hindsight that this is what went right and this is what went wrong. But it is a time where you actually see nothing right, where if you invest, you will make the best return that you can ever do for your portfolio. And it requires that discipline of investing regularly, having the courage, being greedy when others are fearful, and having that patience to hold on to that investments for a year, 2 years, 3 years. Sometimes I feel it would be best if a lot of us would have not have access to the trading terminal where you see all your prices tick by tick. I'm sure CNBC wouldn't like that, but if just imagine the house that you live in. If every second you would know what is the price of that house, then after 6 months, you'll say, you'll come and tell your wife, 20% gir gaya ghar. Let's do one thing, let's sell this, buy something else, or stay on rent. जब और गिरेगा तब वापस आ जाएंगे. We'll buy it back. If that was the case, then you would start possibly looking at real estate and every other asset class differently. It's because that you see the stock market prices tick by tick that this temptation to speculate and this urge to continuously look at a mobile phone or a TV screen and look at the price, and then all the other emotions that follow, lead us to trade more than invest. So I think if you can hold on to your stocks for a long term, this is a great time to buy. Can there be a correction? Yes, I think there could be days which will take all of us by surprise, and we might see some event, maybe global, which will cause a huge drop in the Sensex. That could be the case. So if you're a trader, you'll get stopped out. But if you're an investor, if you invest regularly, so if you buy something today, you started accumulating, and that day that comes, 2 or 3 of them possibly in the next few months, where you see a huge fall in the market, and you take that as an opportunity to add to your positions or to buy that stock which you loved always, but always thought that ye thoda niche aayega to main buy karunga. If that is the case, then you're surely making money in this market. But થાય શું, આપણે એક સ્ટોક જોઈએ 300 પર ને કે આ 200 તું લઈ લે, પણ સાચે 200 આવે ત્યારે કે તો બહુ ખરાબ લાગે છે, શું થઈ ગયું. So this is what happens. So basically more than any other detailed research or anything else, what it requires is certain discipline and courage. So coming to the bad news first, And I call it the near-term bad news because I think there's a lot of potential for this economy, and we have a lot more positives in the medium to long term than negatives. And therefore, let's just talk about what is worrying a lot of people more recently. You know, there's a US Fed rate hike which everybody fears. It was supposed to happen. A lot of people expected it to happen, the last time, and they didn't do it, and the markets were fretting. This is something which is going to happen. Whether it happens towards the end of this year, whether it happens at the start of the next year, it will happen. And the fear is that the Fed might not stop at one hike. It might hike 4 times or 5 times. But I think it will be very, very gradual, calibrated, and therefore this is not something that you need to be overly worried about. Obviously, US is the center of all financial markets of the world, and therefore you need to track what's happening there. But I think there's no point in overly worrying about this. The one way that I look at it is that if US is hiking rates, it means that their economy is recovering. So that's actually a positive way of looking at it. But in any case, when it happens, if it happens, and whether they do 4 or 5 hikes, they'll do it gradually. So I think the shock will be absorbed. Ideally, it would have been great if they would have, the event would have been done with and they would have hiked it. But obviously, they're looking at the global economy, they're looking at the situation in China, and they're waiting and watching. The other is the possibility that, China might further devalue its currency. And if you look at historically, it has never happened that China has just, devalued its currency by 2 or 3% and stopped. It's always done it a little more, and not just 2 or 3%. There's been a little more material devaluation that's happened. So it's possible that this might also happen. They've already done it once, and maybe they'll wait for some more time. And if the GDP growth continues to fall, then they might again resort to a further devaluation. But again, when this happens, you will get that 1 or 2 bad days that I talk about, where you'll see a big dip in the Nifty or Sensex. But that actually is a great opportunity if you're an investor to buy the stocks that you've always wanted. And if you look at these global factors, then this is what has caused a lot of portfolio investors, foreign portfolio investors, to sell in the last few months. Whether it be sovereign wealth funds, ETFs, and just yesterday I was reading in the paper that some long-only funds too. But which I actually thought was a good thing because, like Nilesh